Illustration on bad debts. Page 171 of study material, financial accounting. The provision for bad debts account shows a balance of 5,000 on 1st January 2014. The bad debts during the year 2014 amounted to rupees 3,000. The sundry debtors on 31st December 2014 were 50,000. On 31st December 2014, there was an additional bad debt of 3,000. Create a new provision at 10% on debtors. Bad debt recovers 500. You are required to show necessary ledger accounts and a balance sheet. So, here we have to prepare ledger accounts which are required. So, now what is the required ledgers? First, we will go and understand each item. So, what it is? The provision for doubtful debt account shows a balance of 5,000 on 1st January 2014. And then they have said the sundry debtors as on 31st December 2014 is 50,000. So from this whole question, after reading the whole question, we understand the accounting period under consideration is 1st January 2014 to 31st December 2014. Okay. So when they have given this provision for doubtful debt balance, it is an opening balance of it. And when they have given this sundry debtors balance, it's a closing balance. Okay. And after that they have said on 31st December 2014 there was an additional bad debts of 3,000. Means on that last date of the accounting period there further bad debts happened. And then they create a new provision of 10% on debtors. So extra provision has to be made on the net debtors as we discussed. So first we will make the ledger of provision for doubtful debts. As I discussed, provision for doubtful debt is a liability account because we are netting it from the assets. Because when the presentation comes, it is like debtors less provision for doubtful debts, because we are expecting this much amount of bad debts may happen. So we are deducting it from our debtors. That is the reason we are deducting it from our debtors. So if the debtors is an asset, we can assume that it's a provision for doubtful debts is a liability item. So our ledger will look as opening balance of provision for doubtful debt will be on the credit side because it's a liability. Okay. So balance brought down 5,000 on the credit side. Then the bad debt during the year 2014 amounted to rupees 3,000. This is the bad debt which has already occurred and it's been booked also. Because how we understood it is booked, because the sundry debtors as on 31st December 2014 is given that balance. It means this bad debts has been given the impact. This bad debts impact is been given on this sundry debtors and the net figure is been given to us. So this bad debts we will show only, this will have only one impact. So on bad debts account we will prepare ledger, and this bad debts we will show this is an expense item. So this will come on the debit side. So on debit side we will write that 3,000, and where it will go, it will be reduced from the sundry debtors. That is the reason bad debts to sundry debtors. We have to see the each item from the entry point. Like when the bad debts during the year 2014, what entry we would have passed? Bad debts is an expense. So bad debt account debit to debtors, because we are reducing the debtors to that extent. So that is the reason bad debts account to sundry debtors 3,000. Okay. And the sundry debtors 31st December 2014 50,000. So we can make a debtors ledger. They have not shown. So debtors ledger, it's a debit and a credit. Opening balance will come on the debit side because it's an asset. So it will come on 50,000 here. Right? Now, on 31st December 2014, there was an additional bad debt of 3,000. Like as on the last day of the accounting day, this additional bad debts had occurred. So we have to pass the journal entry and give the impact. So there will be two adjustment entries. So what will be, first we'll understand what will be the journal entry. Journal entry will be the this, same, bad debts debit to debtors. So same 3000 again, further bad debts had happened. So this is the additional bad debts entry. Now we will give the impact. How we will give? Bad debts account, again it will hit. So in the bad debts ledger, again 3000 to debtors. And in debtors, we will give that extra bad debts impact. So bad debts 3000. Okay. So we gave two impact of this bad debts because this is the bad debt which has occurred on the last day of which the entry has not passed in the books of accounts. So we have to give two impacts of it. Second, create a new provision 10% on debtors. This will be on the net debtors. So first we have to find out the net debtors. Net debtors means whatever the debtors balance is there, from that all the actual bad debts have occurred, we have to deduct it and get the final figure. So what is 50,000 minus 3,000? So 47,000 is our net debtors. On that we will make the provision. So I will write here, the provision entry will be provision for bad debts debit to debtors. Okay. And what is the figure will be on 47,000 we will do 10%, as they have said in the question, 10% on debtors. So it will come up to 4,700. So I'll write here on the credit side, provision for bad debts 4,700. Okay. And in the provision for bad debts ledger, I will write 4,700. Now we have to understand this is a closing balance because at the year end we are making the provision to the extent of this. So we will show this figure as a closing balance of provision for doubtful debts. So 4,700. This we have to remember. Okay. Further they have said bad debts recovered 500. Bad debts recovered 500. Recovery is an income, so we have to credit it. So I can say the entry will be bad debts recovery is our income, so we will credit it. So 2. And we have to give impact to, see this will go either first we would have received money. So bank account debit to bad debt recovery account because money is coming in. So bank account debit to bad debt recovery. And at the year end, all the nominal accounts should be closed down and it should go to P&L. So then we have to close this ledger. So we had to pass one more entry saying bad debts recovery debit to P&L. So if you see in the bad debts recovery ledger, one is by bank 500 and to P&L 500. And with that our bad debts recovery ledger gets closed. Okay. So each adjustment we should look from the journal entry point. Once we understand the journal entry, we will understand where to post it and how to present it. So we did all the adjustments. Now we'll start closing the books. So first we will close the bad debts account. So bad debts account, we have a debit balance of 6,000. So we'll close, we have 6,000 debit side and whole bad debts will take it to provision for doubtful debts. This is a balancing figure. And that 6,000 we took it to the provision for doubtful debts account. And we will close this provision for doubtful debts ledger. And here our debit side is heavier. So we are getting balancing figure on the credit side and that balancing figure always will go to P&L account. Whether it comes on debit side or credit side, the balancing figure, it will be posted to P&L account. It will be transferred to P&L account. So this 5,700 will go to P&L account. Okay. So first we close bad debts account. Second we close provision for doubtful debts account. And last we'll close the debtors. So we'll close the debtors and whatever the closing balance is there, it's our balance, closing balance of debtors. So balance carried down, balancing figure whatever it is, it will be. Now the presentation part. In the P&L, we have to show the whole provision for doubtful debt ledger in a vertical form. So if you see this whole transaction, it's nothing but whole presentation is nothing but the ledger. If you see the ledger, it will be looking 4,700 plus 6,000 minus 5,000 minus 5,700. 4,700 plus 6,000 minus 5,000, and net figure they would have shown in the outer column 5,700. If you see, okay. So finally they have put transferred to the P&L account 5,700 in the outer column. Same way in the balance sheet also, the whole debtors ledger will be reflecting there. So if you see, it will be 50,000 minus further bad debts 3,000. So 47,000 is the net debtors. On that new provision they have made of 10%, and the net figure is what it will be appearing in your balance sheet. So this is a balance sheet extract because we can't prepare full balance sheet. Same it is for the P&L. It's an extract. Okay. So this is the treatment we will be giving for provision for doubtful debts and bad debts. So we should be very clear whether the bad debts impact is given in the books or not, whether it's a further bad debts, and accordingly one or two impact has to be given. We will be deciding, and accordingly we will be making the presentation of it.